In this video, I want to compare the Fair Tax Act of 30% to our current taxes and compare the two at different income levels. Now, let's start out talking about just how this fair tax works, because a lot of people are confused about how the math is actually done. So it is 23% of each dollar, which would work out to 30%, but it's not what you think. So when we start with the Fair Tax Act, if we had something that was $100 or the final price was $100, what it would really be is 23 of those dollars would go to taxes and the other 77 would be the price of the good. So said another way, or the way that you might be hearing it, is that if something cost $100, or $100,000, we would have to add an extra $30,000 to get to $130,000. Now, $30,000 of $130,000 is 23%, or roughly, you have to do some rounding there. That's how the math works. But this is not how you look at your taxes today. The way that you look at your taxes would be, I earn $100,000. How much is coming out of that $100,000 to pay my taxes? That would be this math up here. So I want you to think of that in the back of your mind as we're going through this math, because it is exactly the same. Now, said another way, I want to show you the different income levels, or some of them, that we're going to go over. It would be as if to say I earn $150,000, but in reality, you have to earn $188,962, subtract your taxes and FICA, and then you end up with $150,000. I wrote it out so you can kind of see that reverse math that you're hearing explained with the Fair Tax Act. If we look at $100,000, that would be you would need to earn a gross amount of $121,587, $75,000, $88,962. And if you wanted $50,000 at the end of the day, you'd actually need to earn $57,848. Now, let me say that one more time. If you earn this amount, this is the amount that will end up, if you're married filing jointly, this is the amount that will end up in your bank account. After you pay all your taxes or have all your withholdings and do your taxes and everything, this is the amount that you'd have, with no other credits, no other deductions, just doing the tax brackets with your FICA taxes. That is it. So that is the math right there. Now let me go ahead and pull it up on the screen. Let's go through this together. Now here's the first part of the Fair Tax Act, and it is the rebate, or the prebate as a lot of people are calling it. This is the amount of money you would get in advance, no matter what, no matter how little you earned, no matter how much you earned, this is the amount that you would get, and I have it broken down. So if you are married filing jointly, a household of two, you're going to get $8,748 for the year, which would break down to $729 per month. If you were married filing jointly with one dependent, it would be $10,290 for the year, and a household of four would be $11,832. Now, I wrote out what it would look like for married filing jointly. I also wrote out what it would look like if you were single or had multiple dependents, and this is the amount that you would get all the way up until 8 people in your household, also broken down monthly. So you would get that no matter what, no matter how little or how much you make. This is the first part that I wanted to go over in the Fair Tax Act. So kind of like a universal basic income. So I'm going to show that in the calculations as we move through this. All right, so here I have the married filing jointly tax brackets for 2022. So just wanted to show exactly where I'm getting all of this math. Here's all the tax brackets, standard deductions. We're going to do married filing jointly. So somebody that is earning today $50,000, if they're doing their taxes right now, that earns $50,000, married filing jointly, standard deduction, total tax with $2,481. They have a net income of $47,519. If we also subtract their FICA taxes, that would give them a net pay of $43,694. And I just wanted to start with that to show you the breakdown of what we're going to go through. Now let's compare this to the Fair Tax Act. So I have it on this page right here. So I'm starting with $100,000. In fact, let's start with $50,000 just to start on the lowest number that we're going to go through today. So $50,000, we have the same math, the $43,694. Now let's compare that to the Fair Tax Act. And you're probably wondering, what on earth are all these numbers? So we're going to start with our $50,000, which is tax-free income. We're going to add back half of our FICA, which is the employer side. The reason I put it up there is because it is part of the compensation to you. The employer just pays it on your behalf. You're paying your half, the employer pays their half. So I decided to add it back in these calculations. Then I'm showing a net income just to adding those two numbers up with that prebate that we saw before. So a married filing jointly family of 4, that's $11,832. If we add all this up, this is going to be $65,657. Now, if we spend every single dollar, that means we're going to have a total tax liability or end up paying in taxes of $15,101.11. That means we have spending power of $50,556. So I'm just showing it a different way. So if we went out and we bought $65,657 worth of items, we couldn't because they had additional taxes, which is exactly how our current income works. You get your income, they subtract the taxes, then you go out and spend. Over on the Fair Tax Act, it's just baked into the price. So in essence, you have a spending power of $50,556, and from that, you'll pay $15,101 in taxes. Now, let's go ahead and add some other numbers in here, and I will put in $100,000. And we can see that it still makes sense to do the Fair Tax Act because you're going to have more spending power. Now, even if we get rid of this FICA, I believe that it will still work. So let me take out the formula here and I'll save it for a quick second because I'm sure a lot of people are like, well, our employers aren't going to give us this money. So let's just go ahead and take it out for just a second and we can see that you're still better off. Now I'm going to go ahead and put that back in here as we move up in these numbers to show you what this all looks like. So I'm going to go to now $150,000. Now I did see a lot of comments that the middle class is going to get hit hard on this. It doesn't look like that from these numbers. Let's go up to $200,000. And again, it doesn't look like that. You're still better off with the Fair Tax Act. And I'm not calculating any credits or deductions on the current taxable situation, although there probably are a ton that people use, but it does completely change your spending habits because we can go right over to the fair tax side and make a similar argument that for each dollar that we don't spend, we're not going to pay taxes on it. So let's bring this up to $250,000. And that is going to still be better off with the Fair Tax Act. Let's go to $500,000. And we're still better off with the Fair Tax Act. Let's go to $1 million. And we're still better off with the Fair Tax Act. And let me just throw another zero in to bring it to $10 million. And we're still better off with the Fair Tax Act. Now, there is a lot of different changes that we can make with this math and say, well, we have a lot of credits and deductions that we can use to work our current income to get it down. There's a lot of tax loopholes that we can use in the current taxable situation to make that even look even better, to get our spending power up. But the same could be said for the Fair Tax Act side, that we have the income coming in and we're not, if we don't spend it and we just save it, then there's no tax on it. So that's a huge benefit. In addition to that, with the Fair Tax Act, the business to business stuff, there's no taxes on that stuff. It's a consumptions tax. So it's the end user that's basically getting the tax, or at least that's the way it's being described. So to me, I would just kind of trying to figure out how to go through some of this math to say at what income level does the Fair Tax Act are you not better off with the Fair Tax Act? It's really in none of these situations that I can figure out unless you're doing other things with the current taxable situation to basically reduce your taxable income. But again, saving it. And you can make the same argument for the Fair Tax Act, and those taxes would then go down. So it's one of these, wherever there's a gimme, there's a gotcha, but it does still look better with the Fair Tax Act. Now, I will make this final comment, is that a lot of the comments that I've seen on my previous two videos are complaining either about the grocery bills or the living expenses is going to have that additional tax on it, the consumptions tax. That is what the prebate is for. And I know it's a small amount, or even the poverty levels are a small amount relative, especially for a family of 4. It's tough to live on those amounts, but it is giving you that money no matter what your income is. And in addition to that, if you get your income up and you have every incentive to make more money, there's no incentive with the Fair Tax Act to stop making an income or to keep your income below a certain level. And that's what our current taxable situation does. It says, wait a second, you should cap at this amount so you can get this credit or get this deduction. So the Fair Tax Act basically eliminates all of that and really says, go out there and earn as much as you can and your situation will improve. That's not necessarily always the case with our current taxable situation. So I just wanted to go through this math. Let me know what you think in the comments down below. And I'll probably do more scenarios as the comments roll in. So leave comments, let me know what you think, and I'll see you on the next one.